Hey guys, it's Paul here with Trade Binary Options with Success, coming to you guys with episode 2 of Trading Tips. Today we're going to be talking about money management when trading binary options. Now first, choosing the right trade size is one of the most important things when starting to trade. Now, if you're a beginner, I would recommend never trading more than 5% of your balance. So if you have $200, I wouldn't do more than a $10 trade. That is, so if you do have a losing trade, you don't blow your account. If you do a $50 trade, yeah, you can profit $30, depending on what the payout is, but you could also lose that $50, making your account a fourth less of what it was. Now, if you choose to martingale, have the entire martingale only be 5% of your balance. So that means if you have a $200 account, you shouldn't be martingaling. Because if you start out at a $10 martingale, if you lose all three, you're going to be up in like $120, $150 loss, which is your account is pretty much gone. So I don't recommend if you have a $200 account, don't martingale. Only martingale if you know the risks and if you have traded for a long time. Because martingaling can be okay, but only if you're kind of an expert in the field. Because if you martingale without really knowing what you're doing, you can really blow your accounts really fast. Now, if you do have more experience, you can trade 10% of your balance, but I would never recommend going bigger than that just because there are losses, and if you do more than that, you can really make your account suffer. So I wouldn't do that. Now, if you do raise your $200 account to a $300 account, I wouldn't start taking big trades just because you're $100 in the profit. You want to build slow and steady. That's how I like to look at it. So you don't end up putting yourself back at square one if you lose a few big trades. Now, knowing when to call it a day is very important. So when trading, always have a goal. Are you a 1-0 kind of person? 1 win, 0 losses? 2 wins, 0 losses? What kind of trader are you? What are you looking for? That's the goal that you need to have in mind. Do you want to get out when you win one a day? That's sometimes what I do. If I get one trade in and it wins, I'm sometimes done because I don't want to become too greedy, because that is where I've lost more money, and the most money I've ever lost in binary options was because I became too greedy. That means that I didn't know when to call it a day because I'm so up there, I'm in so much in profit, and I then take a loss and I keep losing, and then I want to make all that money back that I already had because my mindset is, well, I was so much up. But now look at me, and you just keep digging yourself lower and lower, which is emotional trading. You need to avoid emotional trading. Stay on top of it. Have mind over money. Make sure you know what you're doing. So you don't know what you're doing if you're becoming emotional trader. So always have a goal. Now, staying positive is very important. Keep positive and realistic thoughts. When I say realistic thoughts, I mean you need to make sure you're setting realistic goals. So if you have a $200 account, don't expect to be making $200 a day. If you're taking $10 trades, you win 2 or 3, that's $20 a day. So be realistic. Now, one of my favorite things I tell people is to win by the week or the month, not the day. I have losing days. Every trader has a losing day. It's just you need to know when to cut your losses. That's when you become a real trader, is when you know when to keep going or to stop. Alright, and this is one of my favorite quotes that I kind of changed. I heard it in my lifetime, a little bit different words, but I apply it to trading. It's very important. Now, if you can have a losing day and be all upset about it, or you can have a losing day and be happy about it. Either way, you still have a losing day. And now that sounds weird, but it's when you look at it, it can change your entire day upside down if you're having a losing day. Because I do have losing days. Every trader has a losing day. But having the mindset to come back and profit the next day is where it's very important. You need to make sure you have a good mindset when trading. If you have a bunch of emotional problems going on, like maybe in your house or relationship, don't trade. That can affect your trading. You want to be 100%, 110% all focused on trading. Now, that sums up my episode 2 of Binary Options Trading Tips. If you guys have any questions, never hesitate to contact me. Info is in the description. And if you guys keep wanting me to make these, like and subscribe. Thanks, guys, and don't forget to check out the full review on my blog, www.tradebinaryoptionswithsuccess. See you guys. Hey guys, it's Paul here with Trade Binary Options with Success, coming to you guys with a trading tips video. Today we're going to be on episode 3 and talking about why it's so important to practice while trading binary options. Now first, I say practice, practice, practice. Now you're not going to get any good if you don't practice. You do not see any professional athlete that hasn't practiced countless hours to get where they are today. Now that is the same thing for trading. You need to practice to get good at it. Now commit time to trade every day. Create a time that works around your schedule and gives you a chance to practice. Now you can study all you want, you can read up everything on binary options, but you're not going to actually get a feel for it unless you practice. Now practice on a demo account. Don't play with your real money. You may be eager to make some money, and maybe you might see something that 100% works, on some sort of video on YouTube. But if you're going to try it, why don't just try it with fake money to see if it actually works? I mean, would you rather have it work in 2 weeks and make money from it, or would you rather have it just blow your account and not, get discouraged from trading? So I recommend practicing on a demo account so you can get the feel for trading. Whether you're a new person or have been trading for a while, practicing on a demo account can come in handy whenever testing out any different type of trading. Now, I recommend keeping track of your progress. Why I say that is because this allows you to learn what works and what doesn't. Have some sort of trading journal that allows you to write down your thoughts of your trades you've taken. I personally, when I test out strategies, I write things down all the time. This allows me to go back and decide what I'm going to trade and what I'm not going to trade. This allows me to raise in the money percentage of strategies because it gives me a chance to see, that doesn't work with the strategy, so I'm not going to do that. And the same goes for you guys, so I recommend keeping a trading journal for that reason. Now trade with the strategy, don't just trade blindly, and always stick to that strategy. Now, this is what's nice about strategies, is you can tailor them to fit you. So that means you can kind of change the rules to raise in the money percentage, but you're not going to be able to do that unless you have a trading journal, because you're not going to remember a month ago trades you took a month ago that didn't work. If you write them down, that way you'll know that type of trading doesn't work with that strategy. Now, I personally keep a record of all the income I've made through binary options, and I actually created a log for you guys to do that with, and I hope that this helps you guys. And so you guys are welcome to download it, and the link will be in the description. And right now I'm going to show you guys what it looks like. Alright guys, now this is the binary option scorebook that I created for you guys. Now, just to show an example, say if you guys had 4 wins, you can put in 0 losses. This will total it for your week. Now, you can put in, say you will make $24, so it automatically calculate how much you make and how much you lose. Now, it will keep track of your end of the month progress, or end of the week, sorry, progress. Also, end of the month progress. Now I did it up to the 24th of February, so that's kind of new for you guys, so you guys can start entering in if you want to. Now what's cool is it has links to all the different charts, either the MetaTrader 4 US server or European server, and also Thinkorswim. Now this is a trade size calculator where you can enter in how big a trade you should be taking. Now say if I had a $300 balance, it'll automatically change for you guys. Now same with over here. Now if you're into martingaling, now there's no point of martingaling if you have a low account, as you can see. I mean, it's just not big a payout. I mean, if you have more, there are some benefits if you know what you're doing, but if you're a beginner, I don't recommend martingaling. Alright, so this is what it does. It'll total up how much you would be in for all 5 trades if you get to the 5th trade, and also how much you will profit if it's 70% payout or a 80% payout. Now, this will give you a chance to enter in the trade size that you want to start with. If you're more risky, or you can just change it. It gives you a different chance. So say 5%, you want to start with 5% of your balance. Now you wouldn't be able to do that because your total would be way more than the balance that you have. So this gives you an option to see what is possible with martingaling. Now, this is a tax calculator where you can enter in, say, how much percent you're going to pay for taxes. What it will do is it'll take the percentage of your total profit. Now, when scrolling down, we'll see that It goes for this entire year of 2014, and at the end of the month it'll give you your profit. Now what's kind of cool is if you have a negative profit that month, it does show you by going red, but we always want it sticking in the green, so let's keep it that way. Now if we go over to the right, we'll actually see this kind of quote wall. I just put this together because I thought it was kind of fun, just some trading quotes and just some other kind of quotes that just kind of motivate you, and I just thought that is kind of fun, so you can read those. And here's links to my website, the brokers, signals, scams, strategies, and tips. So the link is in the description for you guys to download it if you'd like to use this. Now, if there's anything that you want to have changed, let me know. The workbook is locked, but you can't unlock it. There is no password. The only reason I locked it is so you guys don't accidentally change something and didn't mean to and don't know how to fix it. But if you know how to work Excel and you want to alter it, go for it. Just unlock it. And this is made in 4 different currencies for you guys. So if you want me to make it in another currency, just let me know. And if you guys have any questions, never hesitate to ask. And I will see you guys on the next binary options trading tip episode. Don't forget to like and subscribe if you want these videos to keep coming. Thanks, guys.
Hey guys, it's Paul here with Trade Binary Options with Success, coming to you guys with a new trading tips video for binary option trading. Now today we're on episode 4 and we're going to be talking about hassle-free, no depositing demo accounts. Now why in the first place would you want a demo account? Now it is important to have a demo account to practice strategies and services with fake money before putting your hard-earned cash on the line. Now, if you're the kind of person that doesn't want to have to deposit in a broker to get a demo account before trying out new services, or if your broker doesn't have an option of trading with the strategy that you are testing, now a lot of these that I know of work perfect with many different strategies that you can test out. Now, what should you use a demo account before using real money on? Now I always recommend using a demo account before using real money on a new strategy, so you learn if the strategy is successful, and this will also help you learn if the strategy is a scam or doesn't perform. Now if you see something across the internet, you come across something and it claims that it's the highest performing thing on the internet, and maybe they give a free option for 7 days or 14 days, why don't you practice it with a demo account before using real money? This way you know if it's legit or if it's a scam. Now I also recommend using this with a new signal service that barely got on the market. This way you know if it's reputable or not, and you're not risking your own money. Now you have the choice if it's a reputable service and has a lot of trade history, and I actually prefer having screenshots over Excel format. Now, this is up to you if you want to make the decision of using a real account or a demo account. Now, where can you get these demo accounts without having to deposit? Now, marketsworld.com offers one, binary.com, you cannot be from the US, and binaryoptionsdemo.com. Now, that is not a real broker, and they just allow you to use a demo account. Now, the links are in the description, and now we're going to briefly go over what that platforms actually appear like. So I'll be right back. Alright guys, now this is the first broker, marketsworld.com. Now since it's the weekend, the market is closed, and this is actually the trading platform where you can add commodities, forex, and indices. Now I can't add any because it's the weekend, but this is what the general platform looks like, and you're able to take trades that are around 5 to 10 minutes, rounding up to the next 5-minute mark on the clock. Now the minimum trade amount is $1, just if you guys are interested. Now the next one is binaryoptionsdemo.com. Now this one is the exact same platform as StockPair, which is why it's really nice, because they have a lot of different expiries. So if you want to try a 60-second options, this is a good platform to test it on. You cannot do that on MarketsWorld. Now on binary.com, you can actually go down to a 15-second trade. So you have a lot to choose from. Just remember a few things. Binary.com does not allow US clients, and binaryoptionsdemo.com is not a real broker, and you cannot deposit real money. It's just a way to practice. Either way, they're all great ways to practice, and I always recommend practicing before using real money. So if you guys are interested in trying out new strategies or services, definitely practice them on a demo account. And I feel these 3 platforms will give you a wide variety of different styles of trading and should cover all of those. So if you guys have any more questions, never hesitate to ask or leave a comment below. And I hope you guys enjoyed this one. Don't forget to like and subscribe if you want them to keep coming. Talk to you guys next time. Thanks for watching, guys. Hey guys, it's Paul here with Trade Binary Options with Success and Binary Options Peak, coming to you guys with a new binary options trading tips video. Today we're on episode 5 and we're going to be talking about indicators. First off, how many indicators should you be using? Now, number 1 rule that you should be sticking to is the KISS. Keep it simple, stupid. Do not overload yourself with too many indicators. That'll actually make your trading worse than actually help it. Now, what are indicators actually used for? They are meant to help you make decisions when trading, not make the decisions for you. That is something so important to remember. Just because an indicator goes off or it does something that indicates something, that doesn't mean it is making the decision for you to trade. It is only advising you. Remember to take only a trade because you know it's going to perform. Never take a trade because you think you are missing out on an opportunity because of what an indicator says. Now, I'm asked this question all the time. Is there one indicator that will make me rich? No. The answer is no. Don't fall for that one indicator that has so much accuracy that it will make you thousands of dollars in just hours. That is not going to happen. If that was possible, then we wouldn't be trading because every single broker would be bankrupt because we'd all hurry and use it and try to get rich quick. It's not possible. So get that idea out of your head. When using indicators, you need to use a technical analysis as well, because a great indicator can be terrible if used incorrectly. Now, you may be asking yourself, what kind of indicators should you be using? I recommend the following. You should or can use Bollinger Bands, a value chart, moving averages, the MACD, oscillators. Now, there's a lot more. Just keep it simple. Do not overwhelm yourself. Do not get the same indicators, like multiple, that are basically doing the same thing. You want to keep it simple and clean. That way, you're not overwhelming yourself with too many things going on. Just remember the KISS, KISS. Keep it simple, stupid. Now, I said that some people sell indicators. Now, you can get a lot of indicators for free. I have not ever paid for an indicator because I have learned where I can get them for free. That way, it saves you money. All you have to do is put in your time. Now, I'll provide a few links below where you can get free indicators, and through these links, there are going to be thousands of free indicators. Just remember just to find a few that you like and use them. Now, also check out binaryoptionspeak.com. Now, this will give you a lot of free indicators as well, and systems, as well as guided strategies on how to use the indicators. Alright guys, to wrap up today's episode, just to remind you guys, remember KISS, keep it simple, stupid. Remember that indicators are used to advise you, not trade for you. Also, make sure to always remember there is not one indicator that is going to make you super rich. Do not fall for those schemes that is saying to sign up under them or send them a bunch of money just for an indicator that's going to make you $4,000 in 4 hours. Now, next, just find a few indicators that you like. Now, if you're looking forward to actually learning how to trade a system, there's going to be a great one this Friday, April 25th, from 2 p.m. to 3:30 p.m. on Binary Options Peak. So make sure you come to that, and it's a great webinar, and the link and the information for all of it will be below. As always, guys, thanks for watching, and have a good one. Hey guys, it's Paul here with Trade Binary Options with Success and Binary Options Peak, coming to you guys with a new Binary Options Trading Tips video. Today, we're on episode 6, and we're going to be talking about trading hours. First things first, when are the Forex markets open? Now, I'm going to include a link in the description, and you guys have seen this before, and it's the Forex Market Time Converter. This will allow you to convert the time when the markets are open into your time zone, make it easier for you guys to know when the markets are open. A common question I'm asked is, when should I be trading? Now, this is very important. The time that you trade depends on what kind of trading you are doing. Are you wanting to trade long-term trends, short-term trends, reversals, or any other trading strategy or system? Now, long-term trades are great for opening times of markets because this is commonly where trading markets appear. Short-term trends and reversals are great for ranging markets because ranging markets is when the market is basically staying in a range and bouncing off support and resistance lines. As you can see, I drew some pictures below where you're able to see what a trending market looks like. This can be either up or down, and a ranging market. Another common question asked is when you should not be trading. You should not be trading when there's little market volume or when the market has a lot of volume. It's easiest to make market predictions when there's a medium market volume and during a ranging market. Also, you should not be trading before and after news releases. News releases affect the market and can throw off your trading because it makes the market unpredictable. We profit from making predictions from the market, so when the market is unpredictable, don't trade. Save your money, guys. Now, time frames to avoid is the New York closing to the Sydney opening, which is about 2 hours, and the Sydney closing to London opening, about 2 hours. So those two breaks you should not be trading. Now, to see when these news releases occur, you can go to forexfactory.com where you're able to see the date, the time that they're released, which is in Eastern Standard Time, the currency that they are affecting, and the impact. Note that yellow means low, orange is medium, and red is high. For the low impact, I would stop trading 5 minutes before and 5 minutes after. If it's orange and red, I would stop 10 minutes before and 10 minutes after. The first type of market volume we're going to be talking about is low market volume. This is usually when no markets are opening, or when there's only one market opening. Now, you should avoid the market when it looks like this, when it's basically going nowhere, just teeny little movements back and forth. It's basically going in a straight line. A great time to trade is when there's medium market volume. This is the easiest way to make market predictions. Another type of volume that you should avoid trading is high market volume. This is where there's huge pip movements. It's very choppy. It's up and down in large movements. You should avoid this. It's very hard to make predictions. Now, when discussing the high volume hours versus the low volume hours, you want to be trading during the high volume hours. Now, that doesn't mean you're trading the high market volume as when the chart looks like the one I previously shown, but you get those nice medium market volume during the high volume hours. Now, the first high volume hours is the London and New York overlap, and that accounts for more than a third of the total Forex trading volume, which means this overlap has a lot of volume. The next overlap that has the second most trading volume is the Sydney and Tokyo overlap, which is also known as the Asian session. It's also a great time to be trading. Now, low volume hours is when there's not a lot of people buying or selling the currencies. You want to avoid this because the market is basically going in a straight line and has very little movement. Now, if you can recall what the low volume market picture I previously shown, you definitely want to avoid that. That's it for today's episode, and I hope that helped you guys when identifying good times to trade and bad times to trade, and also informing you guys on the trading hours. I'm going to be tweeting some of my trades, which is going to be something new, and especially for the after weekend market opening strategy for beginners that are still learning how to implement this strategy. So make sure to follow me on Twitter. Link is in the description below, or you can follow me here. There are a few new articles that can really help you guys with your trading skills on binaryoptionspeak.com. You can find all the links to these new articles in the description. I'd definitely recommend reading all of them. Me and Jack are definitely working hard to help you guys become better binary options traders. Also, don't forget to check out my latest videos. I hope you guys enjoyed this one today. Don't forget to like and subscribe. Hey guys, it's Paul here with Trade Binary Options with Success and Binary Options Peak, come to you guys with a new binary options trading tips video. Today, we're going to be talking about news releases. Now, you may want to grab a pen and paper to take a few notes because this video will be more in depth and very educational. Now, there's a few different websites where you can check out to see what these results are, but we're going to be using one of my personal favorites, forexfactory.com. First thing you see when you go to Forex Factory is a calendar for the current day, where you can see the date on the left side. You must know that the time that these numbers are being released in, that is Eastern Time. If you're not familiar with Eastern Time, it's easier just to compare your location time zone to that of New York's. That way, you are not going to be confused by daylight savings. To the right of that, we have the currency on which the news is impacting, and after that, there is the impact level, which determines how strong a movement the market is going to be seeing. Now, yellow is low, orange is medium, and red is high impact. To the right of that, there is the actual news that is being released, which controls the impact of the news release. Here comes one of the most important part of forexfactory.com, and why I think you should at least have a basic understanding of how to interpret the numbers and information displayed. We will be looking at 3 columns on the side: detail, actual, and forecast. The actual column is updated once the numbers are being released. If we go to the column that says detail, we can click on one of the folders to get more information. Now, when clicking on one of the folders, you're able to see the detail that is taking place on that particular news release. First thing I do is read the measures to get an idea of what the actual news release means. Next, I look at the usual effect. The usual effect is one of the most important tools on Forex Factory, and when you know how to understand it, you will be able to better your trading skills. For this example, we are going to take a look at the Chicago PMI, a medium impact news release. If we click on the details folder, we will first read how the particular release measures. So let's do that. Now that we've opened the folder, we're going to be able to see exactly what it means. Level of diffusion index based on surveyed purchasing managers in the Chicago area. Now that we know what it means, we're going to take a look at the usual effect. If the actual is greater than the forecast, it is good for currency. Since this is a USD currency release, if the actual is better than the forecast, then the value of USD will rise, also meaning it will go down if the actual is less than the forecast. As you can see, the actual numbers that were released were greater than the forecast, meaning that the number was good for the US dollar. This means all currency pairs with the US dollar in it should be affected by the USD rising. To know if a particular asset is going to go up or down because of a currency, I look at it in one way. I think of a currency pair. For this, we're going to be using the Euro USD, a very popular currency pair. I think on the left side, a negative sign, and on the right side, a positive sign. I then think of a small wall in between each currency, and whatever currency is rising is trying to climb over that wall because it's getting stronger. Now, whatever direction the currency is climbing in is whether or not the currency pair is going to go up or down, either in the positive or negative direction that we have already established. So, for the news release that we just discussed, the USD was rising in value, meaning that is the currency that is going to be climbing over the wall. And in this case, it is going to be climbing to the left. And on the left, we decided that was our negative side, meaning the Euro USD will fall because of this release. Let's go check our charts to see how this actually took place. Now, as you can see, the third red candle on this chart is where the news release occurred. As you can see, it had a lot of bigger negative movement than the other candles surrounding it. From analyzing what Forex Factory said and using the numbers released, we were able to tell that the US dollar was going to rise in value, causing the Euro USD to fall in value. This news release affected many other currency pairs that had the US dollar in it, not just the Euro USD. Just know that this news release was small in comparison to some of the high impact news releases. But if you start to look at this and analyze it in this way, you'll be able to see a lot of different effects that the economy releases can affect the market. Now, to wrap it up, just know that it is important to have a small understanding of financial releases because those numbers do affect the economy, resulting in the markets being affected. Just keep it simple and remember a few important things: the impact, the currency it's affecting, and how the actual release is going to affect that currency and other currency pairs. I hope that the analogy of the currency pair with a wall in between helped you to have a basic understanding of what direction that currency pair is going to go. I hope you guys have enjoyed this binary options trading tips video, and don't forget to check out my latest videos if you haven't already. Don't forget to smash that like button if this has helped you, because when you guys do that, it also helps me and lets me know that you guys like my content. As always, thanks for watching, guys. Hey guys, it's Paul here with Trade Binary Options with Success and Binary Options Peak, coming to you guys with a new trading tips episode. Today, we're in episode 8, and we're going to be talking about candlestick patterns. Now, Are candlestick patterns important? Yes, they are. They are very important. For anyone on any trading style, whether you're professional or beginner, knowing at least a few basic candlestick patterns is very important, whether you're trading short-term or long-term. Now, why are they important? It's a good question. They can help identify reversal patterns and continuation patterns. They also help identify bad times to trade. Basically, when you look at a chart, you're looking at candlestick patterns when you're like, you know what, today is not a good day to trade, or this time period is not a good time to trade. That is based off of your candlestick patterns. Now, knowing basic candlestick patterns is vital for your daily trading. Now, should you memorize pages after pages of these patterns? Because there are pages and pages of them. No, I don't recommend that. I think it's best just to memorize a few and practice those. Once you have those memorized, and they're basically second nature to you, you can keep adding a few more at a time. Now, first, I will discuss the most common reversal candlestick patterns that I see most often and ones I think are very important for you to know. Now, before we begin talking about candlestick patterns, it's good for you guys to know the basics of a candlestick, if you don't already. Now, basically, you have your bodies, which on a candlestick pattern, depending on how your chart is set up, can be filled with, say, red for when it's going down and green for when it's going up. Now you have the wick, where basically it's showing that it's gone to that point, but it's not at that level anymore. Now, we're going to be talking about bullish and bearish when talking about our candlestick patterns. Bullish is when a price opens lower and closes higher, creating a green or positive candle, which is a bullish candle. Now, a bearish is the opposite, where it opens high and closes low. Now, the first pattern we're going to be talking about is a bullish engulfing. Now, if you remember what we talked about before, bullish means it's closing higher than where it opened, basically saying it's a positive candle. Now, it's a very strong reversal pattern, and it will show up after a downward trend. Now, if you look at this picture, you can see that it's on a downtrend, and then we see a bullish engulfing candle. A bullish engulfing candle is where it opens lower than the previous candle and closes above it, so it's engulfing it. Now, there are a few rules to remember. First, it's most meaningful toward the end of a downtrend, meaning it is signifying that it is becoming a reversal pattern. So it's important having it after a downtrend, not say when it's flat or towards an upward trend. Now, second, the candle must fully engulf the previous candle. If we look at this example where it's circled, we can notice that it's fully engulfing it. Now that is saying even the lowest wick where it opened and where it's closed is fully engulfing. Now, the first candle must be bearish candle, while engulfing candle must be a bullish candle. Now, if you remember what we said, bullish is positive, bearish is negative. So we can tell the candle before the bullish candle is a bearish, red, negative candle, and then the candle after is a bullish engulfing. So you need a bearish candle before, so you need your red candle before, and then you need your green candle after fully engulfing it, is the basis of using the bullish engulfing candlestick pattern. Now, next we have a bearish engulfing, which is the exact opposite of a bullish engulfing. It is after an upward trend, and instead of a bullish, it's a bearish candle, meaning it's a red candle or negative movement candle. It is engulfing a bullish or green candle. And notice that it opens above and closes below, so it fully engulfs the previous bullish candle. Now, the same as what we talked about before, just the opposite, which will allow you to really memorize these. Very simple, because if you look at it, it's basically one thing, but just the opposite of each other. Now, this candlestick signifies a reversal to start a downward trend. Now, that means we need to have an upward trend, have this candlestick pattern, which signifies that we should be seeing a downward trend begin. Now, just like before, it's most meaningful toward the end of an upward trend, and the second candle, which is basically your first candle before your bearish engulfing, it needs to be bullish. So you need a green candle, and then you need your red bearish engulfing pattern for this to mean something. Now that we've talked about two very important candlestick patterns that were basically the same but just opposite of each other, we're going to be talking about two more that are very similar. meaning that they are the opposite of each other. First, we're going to be talking about the hammer. Now, it gets its name because it similarly looks to a hammer. Now, what you're looking for is the candle that is circled right here. You're looking for this pattern where basically you have a big drop after a downward trend and then momentum shifts, moving the real body up higher. Where you're going to be seeing this candle, it's going to be a positive or green candle after a red candle. Now, after we see this, we will see this on a downward trend, where it is important after a downward trend. But a little bit different than the other two we previously talked about, we need to look for a confirmation candle. A confirmation candle tells you that yes, this trend is reversing. Our confirmation candle is also a positive or green candle. Now, it may be a different color if you're using a different setup. If we have a, say, positive candle, green, we're looking for that as our confirmation. So the order that we're looking for is on a downward trend. We have our hammer pattern right here. Then we look for our confirmation. After that, it's showing you that yes, the pattern is reversing from a downward trend to a positive or upward trend. Now next, we have the hanging man. Exact opposite of the hammer, but coming after a upward trend. Now, same as one we talked about before, it needs a confirmation candle. So basically what we have is it looks similar to a hammer, but instead of being a positive or green candle, it is red. But it has the same similar body where it has a long wick and a small real body. Now, something to note on this. What we're looking for, the three candles that we're looking for. The very first one, which is your green candle, which is coming up from an upward trend. You have your hanging man candlestick pattern up here. And then after that, you have your confirmation, which is a, in this case, negative or red candle. Now, once you get that confirmation after, you will notice that it has begun a downward trend. Always wait for that confirmation, be patient, and wait for that. Now, how is this going to help you? Adding a few different candlestick patterns to your trading arsenal can greatly help your trading. Basically, it will allow you to know more about what is happening before you, right in front of your eyes, instead of just basically having an idea. This way, you actually know what's happening. This will greatly help your price action trading. Now, these are just a few of the many candlestick patterns that are out there. We will start with a few and build from there. Now, don't overwhelm yourself, which is why I'm only giving you 4. I would memorize these and notice these. Go back in your chart history and look for them, point them out, and think about them. Print off a page of this, memorize them until you have them memorized and you know exactly what you're looking for, then add more. Alright, that wraps up today's episode. Don't forget to check out my latest videos. Now, if you ever have any questions, never hesitate to contact me. You guys know my Skype and my email. It's all in the description. And don't forget to subscribe to my newsletter. That way, you guys will always be notified on any new and recent changes. So, thank you for watching, guys, and I'll see you guys next time.